Thank you, Janet. Thank you very much. Fantastic. Now, I've got a very easy job here. I just have to lob questions to the distinguished panelists that we have, and hopefully sit here and hear some very interesting debate. So I won't even start with an introduction of the panelists. I will actually make them do that themselves. They usually do a much better job than I would. What I'd ask, maybe if we can start with Davide and move across, a brief introduction, name, of course, title, and a little bit about your institution in terms of its mandate. Davide?
So thank you very much. So I'm Davide Iacovoni. I am the head of the debt management, the government debt management directorate in the Department of the Treasury, which is one of the departments of the Ministry of Economy and Finance in Italy. And so our job, of course, is to manage all the part of debt that is represented by marketable securities from the very short term to the very long term.
Thank you very much, Davide. Mr. Sharaf, please.
Thank you. So my name is Mohamed Sharaf. I'm the treasurer of Islamic Development Bank. Islamic Development Bank is a multilateral development bank which is based in Jeddah, Saudi Arabia. Our shareholders are 57 member countries. Our mandate is fostering economic development, pushing for sustainable economic infrastructure, education, and human development.
Sato-san, please.
Okay. My name is Nobuki Sato. I'm director in charge of debt management of Japan. And in Ministry of Finance, I lead the formulation of JGB issuance plan, and also I'm engaged in designing the new climate transition bond. Thank you.
Thank you very much. Petra, please.
My name is Petra Wehlert, and I'm heading the capital markets business at KfW. KfW is a promotional bank of Germany with an explicit guarantee, and we run a 90 billion euro program.
Thank you very much. So as you can see, we've of course got people across the globe here, leading SSA issuers and trendsetters. So hopefully some very interesting discussion to be had here. So first question from our side would be really, when we look back at what we've seen here to date, funding activity actually has been surprisingly easy, for lack of a better way to describe it, and certainly not in line with predictions that were cast last year. That being said, we've had to face a huge amount of market stress in terms of geopolitical risks, of course, other risks with the shifting monetary policy, hitting different regions at different times, and of course, in addition to that, quantitative tightening. But maybe we can start with the geopolitical risks and the shift in rates. And Mr. Sharaf, maybe I could come to you first. How has Islamic Development Bank dealt with these risks? And have you seen any impact on your funding program as a result?
Very interesting question. I'll use this mic because mine is not working. I think before going in details, Asif, on this, I think there are 2 points that we need to dwell on the geopolitical risks. One of them is the markets have already, I would say, get used to those bad news and are able to adapt, quickly to those kind of news. The second is that mostly investors, are able now to adjust their portfolios quite rapidly. Mainly, I'm talking about the risking and the repositioning of their portfolios. The repositioning mostly are, I would say, in 3 parameters. One of them is tactical allocation. We've seen more traditional investors, trying to move across their asset classes. Second is currency, moving across currencies to safe havens, but most importantly, trying to buy more high investment grade securities. Having said that, I think for us as an IDB being, with a AAA status, I think what we have seen is more demand coming out into our books. And probably this is no exception for the high-grade SSA issuers. I would say during the course of the last 18 months, we've issued around $6 billion US. Not only that we were oversubscribed in terms of books, but actually we were able to tighten our spreads. So we've tightened around from 60 plus benchmark to around 50 plus benchmark. So what I'm trying to say here is that it depends, the geopolitical risk, are you able to maintain your credit rating and to get the traction coming out from the investor base to be on your books or not.
Fantastic. Thank you very much. I think it's a very good point of markets adjusting very quickly. Maybe I can come to Sato-san next. I mean, Japan as well has dealt with a huge amount of geopolitical risk as any region has. But more recently, you've also had to deal with a shifting monetary policy landscape. How has that really affected your funding program?
Well, Japan has experienced important inflation as well as other countries, but although to a lesser extent than other countries. About the inflation, economic stimulus measures like energy subsidies have been taken in a targeted manner. And at this moment, we have seen robust economic growth and signs such as stock prices and capital investment and wage increases at the highest level in 30 years. So at this moment, the geopolitical risk is not so big issue in Japan. Second point regarding the monetary policy. The Bank of Japan shifted its monetary policy stance and announcing the end of its unprecedented quantitative easing, QE. But however, the BOJ continues to purchase JGB at the roughly same amount as before at this moment. So for a while, increase in interest rates remain within manageable ranges. Of course, the BOJ's QT will be conducted in the near future, and interest rates will rise further. And so other JGB holders, except BOJ, will be more important for us. Such investors include banks, insurance companies, and of course, overseas investors. We will continue close dialogue with these investors and adjust our policy. And also, we are happy to hear other countries which already experienced QT in advance. Thank you.
Thank you very much, Sato-san. And it's a very important mention on QT, and it's a nice segue into maybe our European issuers on the panel. Davide, if I may start with you, QT in particular was a huge concern. Who's going to buy all these bonds, in particular for Italy, given the net issuance? But you've managed to do that, and you've managed to do it in an environment that you've tightened your spreads and almost every metric. How have you managed that?
So yeah, Asif, you are absolutely right. I mean, we are experiencing this period a very, say, peculiar situation. On one side, we are keeping on having large funding needs on a net and on a gross basis, also because these are the years when a lot of medium short-term bonds that have been issued at the start of the pandemic, so especially in 2020, 2022, are now coming due. So we will be experiencing a couple of years of larger redemptions. And on top of that, as you correctly said, we are also an issue regarding the net financial needs to do some very, say, relaxed fiscal policy that we have to push the economy of the country out of the COVID crisis in 2020. Quite generous fiscal policies over these years that now is over, but the point is that the fiscal policy carried out over this year is generating cash effects in terms of reduced tax revenues for this year and the next couple of years. So the first point is that we have definitely large funding needs for this year, the next couple of years, hoping then after in 2027 onward, the situation will improve quite significantly under this perspective. Second point, as you said, ECB, of course, the quantitative tightening has started on the PEP program, supposed to start also on the on the PSPP program. It's supposed to then continue on the PEP program starting from July. Third point is that we are still living in a period of high uncertainty in financial markets. Of course, it's not the same uncertainty that we had a couple of years ago regarding what would have been the peak of rates, but still now we are in a quite uncertainty regarding how this new fiscal policy regime, monetary policy regime will evolve. We all expecting some initial rate cuts in June, but then what will be the situation afterwards? Of course, there's a lot of uncertainty. Now, in this environment, I think the situation went quite well for us, despite this general situation I just described, for a series of reasons. I want to be very frank. Some of these reasons have nothing really to do with our debt management activity. In Italy, we are now experiencing quite a stable political landscape, something that hasn't been the case for several years now. So we have a strong government with a large majority in both parliaments. And I think the market is pricing the fact that now we are in the condition to put in place more short, medium-term oriented policies. Instead, we were used to have just short-term policies with government lasting only 1 year or so. So this, I think it's an important factor. Secondly, there's a lot of fiscal prudence, despite initial expectation about the new government. Now it's not new anymore because almost a couple of years there. But the government has shown quite a strong approach in terms of fiscal policy. For example, when it comes to these generous incentives that were put in place starting from 2020, now the government has been very clear that these benefits and these bonuses has to be closed or has to be reduced massively. And that what is happening actually taking place. There are several decrees that the government has introduced over this year in order to reduce this massively. So the market knows that we have this legacy in terms of cash that we have to pay over these next couple of years, but that this thing will not last anymore because of this decision. So I think this is an important aspect that is priced at the market. And lastly, but definitely not least, of course, the ECB, even if it's getting out of these incentives over these years, it has been quite proactive in terms of flexibility in how to say, buy bonds that have to be redeemed, that are still buying in the market. And they show this flexibility across jurisdictions, and Italy, of course, has benefited in part of this flexibility. And this is another aspect that in the market has been pricing. When it comes to our role, I think what we have been doing over this period, where we have pushed a lot in terms of diversification of products, and if there is time, I'm happy to come back to this point, in order to cope with these large funding needs. On the other side, what we have been trying to do is to combine more and more predictability, but also with flexibility, which means that most of our funding, of course, goes through a regular calendar of auctions and so on. But of course, we have decided to keep a lot of flexibility when it comes, for example, in the timing for syndications. All our syndications so far this year has been quite successful, and I think one of the reasons behind that is the capacity, I think, to find the right window, so to be flexible enough to find and read the market. The other areas where we've been quite active, and we're normally active there, is in terms of liability management. So we buy back bonds or we exchange existing bonds for new bonds quite frequently, because this is a way to help the market also cope with some irregularities or some dislocation. And this is something that we do with a lot of flexibility. We have been reopening off-the-run bonds quite often over these years. And also look at the long end part of the curve, which currently, because of these uncertainty rates, is a little bit a part that is suffering in the market, where we have different maturities longer than 10 years on the 15, 20, 30, and 50. What we try to do in every auction cycle, we try to be quite flexible in the way we reopen these bonds, take into account what's the condition. So I think that this mixture of exogenous factors with respect to debt management and debt management strategies so far are at the heart of this good performance so far.
Fantastic. Thanks, Davide. Maybe Petra, to you next. I mean, KfW often outperforms in an uncertain environment, as Davide was saying. There's a lot of uncertainties. You know, how has KfW managed an increased funding program alongside QT, not to mention increased funding by other large issuers who've been established recently?
Yeah, I mean, first of all, as you mentioned, KfW is a safe haven asset. So, I mean, we have a direct government guarantee. Looking at the overall spread environment, I think versus bonds and versus swaps, it's also from a historic point of view, it's interesting for investors. It's a good asset to buy. And I mean, referring to the volume, I mean, first thing is we have a long experience, but the other thing is we always do some adjustments. 90 billion obviously is a relatively large size. So what we have done, just a couple of points, is we try to make use of the issuance windows more effectively, meaning we have introduced on the Euro side dual tranches. Also just because, I mean, also in the SSA segment, there are more issuers and more competition for the issuance windows. And so we tried that one. I mean, that worked out quite well. So we started the year already in January with a dual tranche and took a 9 billion out of the market. I think this is a good thing. The second thing is we have a very good footprint into the US dollar market, not to underestimate. So we did more dollars already last year. So there we have a completely different investor base. So this is always a tool which we can approach and which we also use more often, also in the future. Yeah, what else? I mean, I also think we have an advantage that we are actually on the funding side not too bureaucratic. So we do not have a large, let's say, RFPs or something, or we do not have an issuance calendar. And I would also put that on the positive side, because if I don't have a calendar, I can take into account the feedback we get from business partners, we get from investors. And so we kind of figure out which windows work best for us. We have a much closer contact to investors developed in the last years, which also means we get different views. We know how investors see the market, and that has actually increased because we have so many tools to approach investors. We see them, we have also the new digital ways to approach each other. And I also think there are some of the bigger investors in the SSA market who are quite active in telling their views. So that is also helpful. And what else? I mean, at the end of the day, QT has also helped us, I would say. Despite of the fact that we all looked at it very skeptically and said, who will all those bonds go? I mean, those bonds carry a very attractive coupon meanwhile. I mean, look at the overall environment, or look where we have been in the last years. It's quite an attractive investment, even for investors who did not approach this segment before. And so therefore, I think with all that taken together, that works out fine.
Fantastic. No, I definitely sees fixed income as an asset class growing in attractiveness. Maybe moving on to some of the hot topics we've seen in markets recently, in particular around ESG, digital retail bonds, and clearly the list goes on. I mean, SSAs, alongside the very large funding volumes that we know have, also act as trendsetters in this market. And no better example than maybe KfW in the green bond markets and the work you've done there, Petra. I mean, how is KfW viewing developments in this segment of the market in terms of ESG, in particular with the green lens?
Well, not sure whether it's about being a trendsetter. I would say, I mean, the SSA market sometimes has also the role to establish infrastructure for new products and so. And so the green market, I mean, it's 10 years ago when we started in that market. And I would say it's always a kind of two-way approach. Our strength is to bring together our international network, international investors, and also to bring into the market the DNA, let's say, of KfW, which is green, because we have a large pool of assets which we can include under our green bond framework. And for us, it was also important to have large volumes because we know investors want to have liquid bonds. No? So it's always those two things to bring them together. And we're still working on that. Yeah. So we now have large liquid bonds outstanding. And on the other hand, we have expanded the framework so to bring in new investors. And so to have the large volume programs and to also have the new ones to show where the direction is going. We also work on the conceptual side. And if you ask me now, I see the future as I think most of us see it, going forward that for all the bonds, we have more transparency and offer more reporting to investors, which is overall a good thing. So every investor can have a deeper look into the issuers. However, there are many investors in this world who prefer ring-fenced bonds. And that's one of the reasons why we still do this use of proceed bonds. Yeah. And as long as we do have the assets, we will develop the reportings, which are also now underlined by the regulatory framework, which is going in the right direction. So we will work on that. And being a trendsetter or not, I think it's a good way to go into this direction. And with that, we have issued, meanwhile, I think, more than 70 billion bonds and have 60 billion something outstanding. And also this in a kind of international approach, yeah? So to involve all the investors. And yeah, this is the way to go. And so that's how we did that.
Fantastic. Maybe not a trendsetter if I was to borrow what Sir Robert said earlier, innovate with purpose. So definitely feels that way. Next question to Mr. Sharaf, please. You know, clearly we've seen an evolution of the buyer base as we've discussed with rates where they are, spreads, performance that you just touched upon as well. Given your issuance program in Sukuk format and given how much you've been able to achieve, as you mentioned earlier, do you think Sukuk is now mainstream? Do you see more international buyers coming to Sukuk bond issuance?
Let me put some figures first, you know, just for the benefit of everyone. So the Sukuk market as of 2023 year end is around 850 billion US dollars. We expect within the next 12 months to be around 1 trillion. Out of it is probably around 50 billion ESG Sukuk, you know, and this is something that we will come back to it later. So eventually it's growing, I think with a compounded annual growth rate of around 6 to 7% every year. Now, how this is being reflected, I can prove it with one thing. We've on the last 4 or 5 years, we've seen a lot of the traditional conventional issuers starting to move into Sukuk format. I'll give you an example. HKMA, Hong Kong Monetary Authority, UK Treasury. Recently, in the last 2 years, we've seen government of Philippines issuing, you know, so in Sukuk format last year. This government of Egypt as well. You know, those are mostly traditional conventional issuers. So why? Why? Because most of those issuers are trying to tap into liquidity into major areas. One of them is the GCC, which is, you know, prone for Sukuk, plus Southeast Asia. Now, how this is affecting us as an IDB, actually, it's not what we are seeing in terms of supply, in terms of buyers. A lot of new investors in the last 3 years, we're getting around 40, 50 investors coming out from the European markets. We are doing a lot of groundwork in Asia, so mainly Hong Kong and China. So eventually what we are seeing is that the market is growing. One very important aspect that we've also noticed that and I think Petra was talking about green and sustainability. Whenever we are issuing on, you know, green Sukuk or ESG sustainability Sukuk, the demand coming out from, you know, Europe and some pockets of, you know, Asia is increasing, and this is why we're talking about trend setting. I think we want to thank our partners in ICMA and London Stock Exchange. We just launched the guidance on green and sustainable Sukuk. I think this is what we are trying to develop the infrastructure and push more Sukuk issuers in toward the ESG and the green landscape. So just to sum it here, I think the market is growing, and we expect that, you know, within the next 4 or 5 years that we will see more traditional conventional. They became more agnostic now to what kind of instrument, and I think we were talking about diversification. Thank you, Asif.
Definitely. No, thank you very much. Very impressive in terms of seeing the growth of the market, and the role you've played in that as well is fantastic. Sato-san, maybe if I could come to you next. You know, we've talked about, you know, the investor dynamics shifting, the demand dynamics shifting. In addition to some of that, we've also seen some of the concerns, as some of the earlier panels also mentioned, fiscal deficits, debt to GDP ratios. You know, how is Japan looking at these changes, and what would you say to the investors expressing some concern around fiscal sustainability?
Okay, about how to adapt to the changing demand. As we are returning to the world of positive interest rates at last, so the demand of investors is also changing. So the amount of government bonds issued per maturity is also changing accordingly. We have to carefully watch the market trend and act more flexible, especially from now on. And moreover, as you are aware, Japan began issuing the world's first sovereign transition bonds, called Japan Climate Transition Bonds, this February. We hope that this new product will expand the JGB investors' base than ever before. In addition, the next auction will be conducted next week on Tuesday. And about the fiscal deficit, in Japan, the majority of JGBs are held by domestic investors for various needs at this moment. And so there exists strong confidence in JGB. And moving forward, the enormous amount of outstanding debt is truly a headache. And in order to maintain the confidence in JGB, it is necessary to make steady progress toward fiscal consolidation with credible targets. And I hope one day no one mentioned that fiscal deficit is a hot topic for Japan, but we have to make extreme efforts to accomplish this.
Fantastic. No, thank you very much, and good luck with the auction, of course, next week as well. Talking about fiscal deficits, green bonds, all very much hot topics in Italy as well, Davide. But in addition to a lot of that, you've had a huge amount of success in the retail bond universe, which of course is another hot topic. Any guidance for other issuers looking at this space? And also, similar question to yourself, how are you speaking to investors around some of those concerns around fiscal deficits?
Sure. So going back to the points I was mentioning before, of course, that these large funding needs we have in a moment where the ECB is withdrawing, we have the need to diversify more our base of investors. The two areas where we've been working quite significantly are on the foreign investor side, where we have seen a gradual increased participation of foreign investors. You have to be aware that since February of last year, more or less 80 billion euros of new net demand has come from foreign investors after a long period of time during the QE, where instead foreign investors were selling at the ECB. So I think this is an area where we need even more efforts on product diversification. And of course, BTP Green goes in that side. Our green bond program goes exactly in that direction. Of course, there is an element of a political element behind this decision, as you know, because it's a way to show to the investors the effort that the Italian government, Italy as a country, is doing through its budget for sustainability. So it's very important, but also from a debt management perspective, it's an incredible tool for diversify our base of investors, having new investors coming in. We have now a stock of green BTPs of more than 45 billion. We have been doing a transaction very recently, quite successful, over 9 billion transaction. The community of ESG investors is recognizing this effort. We have won, there's news of yesterday, we have won for the third time the Climate Bond Initiative Award for the larger issuance last year of an individual bond. And I have to say, so far, the response from ESG investors has been particularly strong. Between 50% and 70% of each transaction has been bought by different ESG investors, with a different graduation of sustainability of these investors, but nonetheless, this is quite a remarkable result. And of course, I think part of this is due to the fact that we have been working a lot in terms of reporting, because these kind of bonds requires a lot of efforts in terms of reporting to investors on what kind of expenditures we'll be covering and what is the impact of these expenditures. So through our report, and I announce here that in a few days we're going to publish the report for the issuance of last year. We've been doing quite a lot of effort in making people have a very granular information regarding these expenditures, the impact, the compliance, also with the European Union taxonomy, even if our framework is according to the ICMA principles. But what we're trying to do more and more and trying to give a sense to investors on how much also, what's the share of our expenditure that is completely aligned with the taxonomy side. So that's an area where we are working. We'll keep on working in the future. And for sure, you can expect further issuance, regular issuance in the coming years. You mentioned retail. This is another area where we've been working. in Italy, the large base of investors is a domestic investors, 3/4 of the debt as in the hands of domestic investors. But of course here the job was trying to balance the different components of domestic investors. There was too much liability versus banks. And so over this period, we have seen some rebalancing from banks through direct holdings from retail. I want to be clear, Italy has always have a long tradition of direct holdings of debt by households, common people. Since 2012, we have accompanied this by issuing tailored product for retail. So it's a long story. And probably the shrinking of retail, the share of retail out of the total debt due to the lower level rates up to 2021 has been, could have been even more accentuated, more stronger, if we had not issuing this tailored product. But with this product, we have, we managed to avoid the reduction of base of retail investors would have been too strong. But since 2021, things have changed quite dramatically because of higher level of rates. We have seen the demand from retail coming not only for these tailored products that we have been innovating and issuing also new ones, and we will be doing also in the future, but also on traditional bills and bonds, especially short-term bonds. The demand coming from retail has been important. So I think that also the international community and domestic institutional investors are aware of these, and I think also the benign situation in Italian debt right now is also due to the fact that investors are aware of this important source of demand that is coming. Now, you're asking me what suggestions also for the others. Well, I have to say, according to our experience, it's very important to understand who is buying these bonds among the retails. What kind of people? Are they young? Are they old? Are they coming from richest part of the countries or poorest part of the countries? So you have to design the kind of target that, according to the past experience, is buying these bonds. And so you have to design, when you design the products, you have to take care of these kind of the characteristic of the buyer. You have to have simple products, because people have to be, even the more educated people, they have to look at these bonds and understand where the yield is coming from. And so the design of the bond has to be simple, and also the way you issue the bond has to be extremely simple. That's what we do. We issue these bonds at par, without fees, with a very open access to everybody, whether they go to a bank or to a postal office or online through the home banking. Finally, communication. Communication strategy is very important. You need to have a very widespread communication using also traditional or new media types according, again, to the targets that you had in mind. So these are all crucial aspects to have a successful return on these products dedicated to retail.
Fantastic. No, thank you very much, Davide. And I think a ICMA masterclass on retail bonds is due. Last question round to the panelists. I mean, maybe again we start with Petra. Perhaps moving a little bit into the unknown when we look at the future. But again, SSAs and especially yourselves here present continue to lead market. So looking forward, what is the most exciting thing you see on the horizon? And if you would also maybe talk about what is the biggest risk you see on the horizon?
So what will be the next development? I mean, I think it's already quite obvious. It's more a look on the overall processes and the front-to-end processes like digitalization. I think if I talk about more efficiency, it's not that I mean to sell our bonds in one day, or we sometimes only need a few hours, right? But if we look at the overall process, I mean, the business is functioning quite well. However, I mean, there are so many technical new possibilities, and there are also some kind of old style parts in this business, like we still sign in Germany the notes, the physical notes. So now we have the Electronic Securities Act. So we have a regulatory framework which we have since 2021, where we can substitute this by a registration. And then, as I said, the new technology leads to the way, and I also think it needs sometimes, it needs potentially again a new infrastructure, as we had at the green bonds at the beginning, and that's something which is again a role which we can play, right? To set up a kind of new infrastructure, to look at the new technical possibilities, and that's what we are already doing at the moment. And so this is for me one thing where we will look at. What's the risk? To be too slow? I don't know. At least not to see it, because we have to look at it. And less so finding the highly customized MTN small size. So this is something which has been a trend years ago, but now it's going into the other direction, which I described from my point of view.
Thanks, Petra. Maybe Sato-san, next to you. What's exciting you in terms of on the horizon? Yes, please.
Yes. The biggest risk might be the emergence of geopolitical risks, not only in Europe and Middle East, but also in East Asia. And I hope, I sincerely hope that such kind of risk will not emerge. And on the other hand, well, the next exciting development, I don't know how to answer, but maybe it's a world peace in which regional conflicts and economic division stop. And it will lead to expansion in the global economy, and it will be definitely good for market too. Thank you.
Thank you very much. Yeah, I think we can all join you in that one. Mr. Sharaf?
I would say that with machine learning and AI, I think, the industry will change, by time. And this is something that we need to be ready and prepared for it. I think this will help in something that have been in the literature for a lot of time, which is democratization of capital market and getting the retail to be involved. And I think this is, what I think would be the trend. It's very fundamental. I was just talking with someone right now that, a 20 years old guy can buy crypto, but he cannot buy fixed income. He knows how to buy cryptos, of his wallet, but he cannot buy a bond. So I think this is, something that we need to watch out, and we need to work on it. Digitization for sure. This is something that I think a lot of MDBs are looking at this point of time. My personal wish, other than this, is that we start to, I wish that whatever we issue become green and sustainable, so it was not to be labeled, but all of our issuances to be green and sustainable. And this requires a lot of work in terms of underlying asset that we're creating. Thank you, guys.
Fantastic. Thank you very much. Davide?
What I can say, we are in Brussels. So to my mind, one of the risks, but at the same time, huge opportunity is the capacity of Europe to go ahead in terms of integration and having a joint challenges to be handled together in a more stronger union with all the financial consequences of that, also in terms of capacity of having joint debt, because the experience that we had in last few years, in my opinion, has been an extremely positive experience. But the funding of EU is going very well, thanks to the fantastic job that our colleagues have been doing here at the Commission. And so the market proved that there is room for, funding together all the joint European projects that are ahead of us. So I think this is a huge opportunity for Europe and also for Italy as a country that is benefiting also different ways from this more stronger integration. But of course, this is also a risk if this does not even go through. So I think this is one of the things that is very important also for the future debt management in Italy.
Fantastic. Thank you very much. I can see we're over time now by 38 seconds, and I don't want to see the strict side of Janet. So I think we'll end there. Just ask everyone for applause for the panelists, and thank you very much for your time.